Straight from the heart of East Tennessee, this is 10 News at Noon.
Welcome back to 10 News at Noon. Back in 2009, we saw the inflation rate drop to below zero, but now we are slowly starting to see those rates go back up. And joining us now to talk about inflation rates is retirement planner Jim Brogan with Brogan Financial. It's good to see you.
Yes, ma'am. It's good to see you, too.
An important topic. So why haven't we seen inflation, and can we expect it?
Well, I think definitely we're going to have our showdown with inflation. Now, some people may say, well, why haven't we seen that so far? And one of the reasons is because, see, the government in the last 2 years has almost tripled the money that's in print. In other words, there's over 2.5 times the amount of money out there as what we saw just 2 years ago. So that, you would think, would make the money in my front pocket worth less because there's so much more out there.
Right.
The problem with that is there's actually and we will have our showdown with inflation, but there's actually a second ingredient to inflation, and it's what's called the velocity of money. And what that means is all that extra money that's out there, what's being done with it? Is it circulating through the economy? Is it being spent by people? You know, we're seeing more and more, banks, businesses, consumers are hoarding cash. And I think we actually brought a chart on this to kind of show the difference in the money that's in print versus the velocity of money. But we've basically seen the amount of money in print, as you see on that blue line. I mean, it's just shot up like a rocket straight out of the ground. That's how much money's been printed in the last couple of years. But see, that red line shows what's happening to that money. It's not being spent, and if you notice, it's going down by almost an inverse relationship. So it hasn't had any net effect. We're actually more concerned with prices going down. So we will have our showdown with inflation, but I think it's going to be a while. It may be 2, 3, even 4 or 5 years.
So what can people do?
I think the biggest thing, Lysandra, is don't panic and do something drastic. Should you sell half your investments and put them all into gold? Probably not. Now, should you own a little bit of precious metals just as a diversification because of these future implications of inflation? I think probably so. The key is to have a little bit of a lot of different things. That way you're not betting on any one thing happening or not happening, because, if you put all your eggs in one basket, what happens if you're wrong? You drop the basket and all those eggs get cracked open.
Right. So don't do anything drastic, I guess.
That's exactly right. And on the diversification, we've just posted a white paper to my website, broganfinancial.com, and it's a white paper on the need to have all the things spread out like that with that diversification.
All right. Well, good advice. Thank you so much.